at the Day Show. I met this wonderful woman I want to introduce you to. Actually, we met through Jack Gist. We did. You're a friend of Jack's, and Jack's a friend of your husband's, Stephen, who's a great musician. And I'd never had a chance to meet you before, but he says, you've got to meet this really cool lady. And he called you the wrong name, but he called you Laura, but it's Iara de Oliveira Line, or you can just call her Iara Line.
That's right. Thank you so much, Cindy, for having your show.
Well, when I heard a little bit about you, Iara, I was really, really impressed. You were a lawyer in Brazil, and you and Stephen met in Brazil. It was a great love story. You could actually make a movie out of it, because he was down there playing music. You helped him, get gigs down there, and you were a lawyer you went through the whole 4 years and very successful down there, and the two of you met, fell in love, and you landed up back here with him.
That's right. It took us about 5 years. We got married. We lived together there for 5 years, and we came here. I came here as a tourist for a while, right? Because he lived here on Maui for over 25 years in the past. I came here as a tourist. Then I came to spend 3 months, and finally in 2014 we did the big move.
And you not only have a background in law, you have a background in tax, and you have set up an amazing business practice here. And I love small business people. And you started Aloha Tax Group, and with your lawyer's background, you've really gotten fully into it. And I have to say, I'm so impressed with what you understand about tax law. I'm about as opposite from understanding anything about numbers and taxes as anyone you'd meet. I'm very much more into the creative thing. And you would laugh at me, Yara, and I really need someone like you in my life, because my idea of doing taxes is keeping all of my bills in one big box, and then it gets to this time of year and I pull everything out and try to figure out and go back where my expenses were and what happened. But I'm so glad to have you here today, because there's some major changes in tax law. And even if you thought you could do your own taxes in the past and things, I mean, some of the changes are kind of mind-boggling, aren't they?
That's right. There are so many changes, Cindy. Actually, over 1,000 pages of changes on our tax code. It is amazing.
You studied yourself and did all kinds of workshops and just getting up to date on what's going on.
That is right. It was over 16 hours this year in the workshops, plus over 16 hours last year, and countless hours just studying before going to bed. A very fun entertainment for me, studying about tax law before going to bed.
I'm sure Stephen loved that. But you do his taxes for him.
That's right.
Well, what drew you to figuring out trying to do taxes? And I'm sure it's very different doing taxes here versus what you were doing in Brazil, right?
It is correct. The tax law is completely different. In Brazil, as you told me, I have this background in law, and I am a business and a tax attorney. Actually, I still have a practice over there. I have a business associate there, so I still work with Brazilian law, and I have fun with that. When I moved to Hawaii, I figured out that I'll not be able to be an attorney here unless I pass the bar. And it's not just passing the bar. You actually need to take your master's degree.
Oh my.
And then pass the bar.
Wow, I didn't know that.
And yes, and I was presented to this amazing professional opportunity to become an enrolled agent. And I didn't have an idea what an enrolled agent was, and I figured out what it was. Actually, enrolled agents are considered the American tax experts. We really need to go deep studying tax law. We learn how to do tax return preparation, tax advice, and we can represent people before the IRS and the Department of Taxations of all 50 states.
Wow.
If the individual or the business ever get in trouble.
Oh my,
so I went through all that certification, passed the 14 hours in tests and tax law and calculations, and became an enrolled agent. And I start helping people with their taxes and with their business.
Well, there's a big difference between that and just doing your own taxes, because, what you just said was extremely important. You can help people if they get in trouble. This is the kind of thing, if you're doing your own taxes, you can't do. And I see these people trying to think they can do their own TurboTaxes. I tell you, I would never be able to do it. And I don't try to do that. But to have someone who really understands it and represents you can really take a lot of stress off people. I should mention Aloha Tax Group is up country, kind of near, you're right near Pukalani Superette, correct?
That's right.
I'll throw out your number there, 419-0840, 419-0840. But I really think that this year especially, I really had heard there's differences. I've heard even in the news last night that a lot of people are filing late this year. I think that's because of a couple of things. There was the government shutdown. So I think a lot of people thought, well, if the government shut down and I'm not going to get my money back any sooner, why should I do my taxes? But have you seen people filing later this year?
Yes, they're filing later this year. And what's happening is a lot of the tax softwares were not 100% ready. They're late as well because there are so many changes. And it's not that they just did the changes and here are the changes. They keep changing because they need to keep explaining what they did because the law was not clear. And they keep issuing these new rules and these new regulations, and the tax softwares need to update the software and was not ready yet. They're still changing a lot of things. So, yes, people are late this year, most definitely.
So we'll get into even more of a panic as we get close to the deadline on the 15th of March, April 15th.
April 15th, hopefully no panic.
Yeah. Well, let's go down some of the changes in the laws. This is really going to be interesting for folks. And some are so kind of out there and confusing, we will let you contact Iara herself if you have questions on them, because there's quite a few major changes. And you were kind enough to actually print out some of these major changes. The first one is unreimbursed employee expenses, which is confusing. So let's explain what that is.
For sure. And on the past, before the change on the tax law, for instance, if the employee need their own vehicle, use their own vehicle to drive, let's say an electrician needs to use his own vehicle to drive and see clients. He's using his own vehicle. He's the one putting gasoline in his car. Their employer is not giving anything back to him. Before the change on the tax law, this employee would be able to deduct these expenses under his tax return, these unreimbursed expenses. But now this can no longer happen.
You can't get reimbursed from the expenses of driving your own vehicle for business?
You cannot deduct from your tax return. You need to have now you need to talk with your employer if this is your situation and say, hey, we need to make an agreement here because I need you to reimburse for the use of my own card for these expenses because I no longer can deduct this in my own tax returns. And this is just for employees, okay, Cindy? This does not apply for business owner because business owners, they can still deduct these expenses. But this is if it's your employee.
What if you're self-employed?
Okay, if you're self-employed, you can still deduct car expenses. There is two ways to deduct. So you can deduct your miles or you can deduct your actual expenses. Actual expenses is when you can depreciate part of your vehicle. You can also depreciate part of, you can write off part of your gas expenses, part of the expenses for changing oil or to fix your car. There's two different ways to do car deductions, vehicle deductions, if you're a self-employee.
Well, the biggest and scary one, really, I think, is that the fact that you need to know. Because in the past, there's a lot of employees who have been claiming tax deductions and were able to do it. But if you're an employee and you don't get it now from your boss, you're in trouble. Iara is with the Aloha Tax Group, and she's a lovely owner-operator who works so hard and really has an understanding of some of the tax laws that are really important for people to know about. I mean, truthfully, I'd heard, of course, I knew there were different tax laws. And I've heard that some of the problems where people are not getting back as much money as they thought they would get back. Because supposedly it's like, okay, great, there's new tax laws, you're going to get back more money. I know there was a story on the news last night. I was watching it, and the question was, why aren't people getting back more money? Well, according to them, if I got this right, what's been happening is people have been getting a little more money back on their paycheck. And because they're taking the money back on their paycheck, which has gone up a little bit with the taxes there, they're not getting the money back at tax return time. Is that correct? Did I understand that correctly?
Yes, Cindy, what is happening is with the change on the tax law, the employer are withholding less taxes on the employee paycheck. So the employee have the impression, wow, I had a raise, I see more money coming in. But when tax time comes, it might have a bad impact on that employee tax return. A lot of people, especially the high pay employees, they always had a return in their taxes. For the 2018 tax returns, they'll probably end up paying taxes, owing taxes to the government. And hopefully their tax professional will be smart enough to ask for an exemption of the penalty for underpayment of estimate taxes. This is very important. Tell your tax professional.
Let's repeat that because this is important, I can tell. So what do you want to ask you to get that repeat that again?
So when you go to your tax professional, if you're an employee,
yes,
and you see that you owe taxes for the first time, all the other years you had a refund, but due to the tax law change, you owe taxes. There is a form number 2210 in your tax return that your tax preparer can request an exemption in order for you not to pay a penalty.
Wow.
For underpayment of estimate taxes.
Wow, that's important to know.
This is very important. Just remember Form 2210. Talk with your tax professional to ask for an exemption because Trump did something actually good on this one.
But
people.
But unless you know how to use it right, it's not.
That's correct. That is correct.
Because people are used to getting X amount, and all of a sudden they're saying, no, wait a second, I owe money? What do you mean I owe money? I thought I was supposed to get more money, right? But it's because you were getting more in your weekly or your monthly or your regular employment took out less money in taxes on your paycheck.
That's correct. That's happening.
But you can work around it by asking for that exemption.
You can. This will be a one-time exemption that individuals can do. Individuals with W-2 can ask for this one-time exemption in their tax returns.
That's important information. I love it. Okay, this is another big one. I tell you, since I've been on Maui, I've moved 7 times. I've been here 30 years. Mm-hmm. I mean, a lot, you know. And it happens here because what happens with, you know, the rents going up, et cetera, or people selling houses, or,
right.
You know, all of a sudden you go, oh, we're going to raise the rent. And it's like, I'm not going to pay $1,000 more. So people move a lot here. So what's the story with the moving expenses?
Yes, Cindy. Unfortunately, you will no longer be able to deduct moving expenses on your federal tax return. Oh. And one thing that I want to tell that is very important for most of our listeners to know is Hawaii did not comply with most of the changes of the federal tax law. So this means we have something going on the federal tax law and another thing going on the Hawaii tax law. So moving expenses, although you no longer can deduct that in your tax return, in your individual tax return, on the Hawaii income tax return, you can still deduct the costs for moving expenses if you fulfill all the requirements.
Wow.
And it will be all the way. This year will be a confused tax return for a lot of people.
Well, I tell you, I mean, you know, moving is so expensive. You know this. You came from Brazil here. I mean, moving is a major expense, and it's one of the things you go, well, at least, and you don't even get it all back. I mean, every move costs usually about $5,000. That's a major expense, and that's if you're moving out of the state or out of the country. It's like, well, way more than that. But so you just expect to get that as a deduction with your tax return. And with your federal tax, you won't get that deduction. Now, would it be the same amount that you'd get back with the state tax, or maybe not?
The state usually can deduct more than you can deduct less. I'm sorry. Usually, the state you have less deductions that you have in the federal level. Yes, but you'll be able to deduct something on the state level. But I want to make clear, like, if you're an employee, right? If you're an employee and you're try to negotiate with your employer for them to pay for moving expenses, especially if you're getting transfer from one island to another, from the mainland. That we know we have a new airplane company coming to Maui, right? Just came to Maui. A lot of people are moving here. Negotiate with your with your employer, said, hey, this time I need you to pay for my moving expenses because I no longer can deduct that from my federal tax return, and I can deduct a little bit on my Hawaii tax return.
Wow, that's very important to know. I'm learning so much from it. I'm talking with Iara here, and Iara with Aloha Tax Return, and right up there near Pukalani, Superette in Makawao. And it's the busy time of year. This is like, are you starting to get lots of calls for lots of appointments?
I am. My clients are already calling a lot and new clients coming in. Yes. And I'll tell you one more time to the listeners, this year, look for a tax professional earlier than later because it will take longer to prepare your taxes this year.
Okay. And your number is 419-0840, 419-0840.
That's right.
Okay, here's another one. And this is one of the ones that's so important to me because, I have obviously a couple of different jobs. I'm not just here as a radio personality. I have all my CDs, my music, my books, and I travel, and I do my traveling as well, and that is part of what I do because I have a travel agent license, and I have a book on travel. And so that's an important part. So that's part of the next one. Meals and entertainment, very important. If you know what it's like in media, your husband's, and you travel a lot, right?
Mm-hmm, that's right.
That's always a really nice deduction. So, but that's changing too, right?
It is. It was in January 2018 and all the way until 2025, because this can change. It's not permanent. So you can still deduct business meals, but you no longer can deduct business entertainment. And this is very important. For instance, you just gave me an example, right? I travel to the Grammys and I need to buy, if you need to purchase the ticket for the Grammys, you'll not be able to deduct that. Even though it's business oriented, you can prove that it's a business deduction. But this is considered entertainment for the IRS. But you still can deduct your meals, you still can deduct your airplane tickets, you still can deduct taxi, Uber, etc.
Yeah, but I mean, in the entertainment field, I mean, that's a fine line to draw, right? I mean, because I went to not only the Grammys last year in New York, I went to see Elton John, and that was entertainment. And the tickets were like, I think, $500 a piece. And that was business related, but I wasn't in the show. I mean, I don't know Elton John personally. So, I mean, there's going to be a lot of things on that, especially for entertainers or people in the entertainment field that are entertainment related, I mean, you know what that's like. Wow. That's really going to be a interesting one to try to break down on that, what is included with entertainment expenses. And a lot of people with business who are small business people, they go to a convention, right? And at the convention, then you take a client or a colleague out and you have dinner and then you go to a show or something like that. Now the shows will not be deductible.
That is correct, Cindy. Yes, you'll be able to deduct the meals and be able to deduct, as I told in your business expenses, the car expenses, Uber expenses, etc., but not the show.
Very interesting. Boy, there's going to be a lot of close calls. There's going to be a lot of calls to make there that are going to be interesting to make on those, right?
It is true. Yeah. But remember, one more time, this will no longer be able to deduct this on the federal tax return. But on the Hawaii tax return, you're still able to have most of these deductions.
Yeah, but you don't get as much money back from your state as you do your federal. And there's
That's
a lot
correct.
more expenses on the federal that you pay,
That's correct.
Whew, okay. I'm starting to get depressed here. Okay.
Oh, there are good things as well. It's not all bad.
All right. Well, the part that we got about 5 minutes more, but this is where it gets a little complicated. I'm going to suggest people call you or make an appointment to see you. It's also completely confusing about qualified business income deductions, or QBID. That's Section 199A for those that know the difference. The up to 20% deduction. What is that about? Very briefly. I know it said it's very confusing, but explain briefly what that is even.
Sure. They created that actually to help small business owners and some people who own rentals. It's an extra deduction that will be in your personal tax return. As you told, it's up to 20% deduction of your net business income or your taxable income. Is the lesser of the two of them. So you can see a lot of people will benefit of these deductions, but there are some requirements. For instance, this will not apply for income coming from C corporations. It needs to be income coming as a sole proprietor or a single member LLC, IS corporation, a partnership.
This is why you've got to call Iara. You totally
it's
lost me on this one.
Oh, I'm so sorry. It's a lot of things, but it's a good thing. Just remember that.
Okay.
It is a good thing that most of small business owners will benefit from this extra up to 20% deduction.
This is a good thing.
It is a good thing. You see, I thought there is a good thing on the chains on the tax law. It's not all bad.
And it's a good thing for small business owners.
It is.
Okay.
It is. Most of my clients are small business owners. They're benefiting from that. It's not a lot of money, but it's some extra deduction that didn't exist before.
Okay. Well, I mean, that's hopeful.
Yes, it is. It is. There is hope.
There's hope. Yeah. Well, I'd have to go down this with you and do the breakdown, and I don't even know what a lot of these are. But some rental activities, there are lots of restrictions for rental activities, so be careful on estates and trust.
That's right. For rental activities, people need to be careful because now the IRS came with a new rule telling that it's for most rental enterprises, and they give the definition what is a rental enterprise. You need to put at least 250 hours a year of working on those rentals.
Oh my.
Those days be collecting
Whoa.
rent and choosing who will rent your place, etc. And you need to prove. You got to have a timesheet in order to get the benefit of the up to 20% deduction.
Well, and now, as you probably read, the Airbnb people are getting under attack, and now they're trying to say that they have to provide their tax information. They're going after some of the Airbnbs, saying that they didn't require the people that were using Airbnb and using them as a service to put their taxes on there. And then some of these Airbnb owners had home residences weren't charging taxes.
It is true.
So that's a real tricky one right there, too. If you didn't ask for taxes and you have an Airbnb rental facility, you could really be in trouble and have to pay some back taxes there.
It is pretty bad, and mostly for state tax. This is mostly for the GET and the TAT for the state of Hawaii. And I have clients that got in trouble with that.
Do you really? Yeah.
We're helping them, though.
Yeah. Well, you know what? I am very impressed with your knowledge, and I can really see where you could be extremely helpful, and I'm so glad you came in because I really didn't know 90% of what you just said. So it's all new information.
I'm happy you learned something.
I
That's
did.
the goal.
I did. And I learned I better make an appointment for you with you real soon and get organized. And the number to call for Aloha Tax Group and Iara is the best number is 419-0840, right? 419-0840.
That's correct.
AlohaTaxGroup.com. And I thank you so much. I learned so much.
Thank you, Cindy.
We're going to have you back and talk some more about all this because it is confusing. I mean, and I'm trying not to be overwhelmed by it, but if there's someone there to help out, it really is wonderful and awesome. So thank you for your great work, and I love seeing an independent business owner like you who's so smart, getting out there and doing what you're doing. So
Thank you, Cindy.
a big mahalo to you.